Could a small, historically unprofitable mining company really be on the verge of transforming into a strategic national asset, maybe one with massive upside potential?
Or is it heading for, a bit of a harsh reality check?
That's the question. We're about to deep dive into a stock some analysts see as a strong buy, maybe up to 50% upside potential.
And yet it's got this exceptionally high short interest hanging over it. Very interesting setup.
Today, we're taking that deep dive into United States Antimony Corporation, ticker UAMY. And this isn't just about one company, really. It's about a critical mineral caught right at a geopolitical crossroads.
Yeah, we've got a pretty comprehensive stock research report here to unpack. It should help you understand all the complex layers of this Montana-based miner.
Our mission, as always, is to pull out the most important insights, maybe highlight some surprising facts along the way, and just help you understand what makes UAMY such a fascinating case study right now.
Especially, and this is important, with their earnings report due August 12th, 2025.
That's right. And just so you know, we will be covering those earnings literally within minutes of their release. So definitely stay tuned to Stock Analytics AI for that rapid analysis.
So if you're curious about how these huge geopolitical shifts can impact a single company,
Or, how a management turnaround can genuinely transform a business.
then you are absolutely in the right place.
Before we jump in, just a quick reminder, please like and subscribe to Stock Analytics AI. Our members at $4.99 a month get priority deep dives on specific tickers.
And we're actually covering all of the S&P 500 stocks over the next few months. Members get exclusive priority access to those.
Yep. And if you just want a one-off deep dive on a particular stock, just drop us a super thanks. We appreciate the support.
Okay, let's get into it.
All right, let's begin our exploration. We're starting with the fundamentals, the core business, the leadership, and the financial health of UAMY. Welcome to Chapter 1, Business Analysis.
So, in a world that seems increasingly defined by these geopolitical fractures, supply chain warfare, could a small Montana mining company, one that's historically struggled to make a profit, actually be turning into a cornerstone of America's national and economic security?
It sounds dramatic, but that's kind of the core question, isn't it? To really get it, you have to start with what UAMY actually does. They're what you call a fully integrated natural resource company.
Fully integrated, meaning?
Meaning they handle the whole process.
Yeah.
From, mining the raw materials,
Yeah.
right through transportation, milling, smelting, and then finally selling the end products.
Those products are mainly?
Antimony, zeolite, and also some precious metals like gold and silver that they recover along the way.
Okay. And looking at their recent history, there was this really big strategic shift, wasn't there? Something about Mexico. Oh, absolutely pivotal. Yeah. For years, they had these operations in Mexico that were just, chronically unprofitable. They were pouring money in.
Right.
Then, March 2024, the new management makes a decisive call.
Yeah.
Shut them down. Completely.
And the impact of that decision.
Huge. It basically stopped the bleeding, financially speaking. And it let them refocus all that capital, all that attention, onto their more promising assets right here in the U.S., Montana, Idaho, Alaska.
Which also aligns better with the whole domestic supply chain push, I imagine.
Exactly. It simplifies the business, cuts the losses, and lines them up perfectly with these big geopolitical trends favoring secure domestic sources for critical stuff. It signals a whole new direction.
So let's talk about those key products. Antimony first. We hear critical mineral a lot. What makes it so critical?
Well, it's got diverse uses. The big one is flame retardants, in plastics, textiles, super important for safety. But it's also a catalyst in chemical processes. And here's an interesting one. It's used in lead-acid batteries.
Lead acid, like for cars.
Yep, including the ones used in many electric vehicles. So it gives UAMY this kind of unexpected link to the whole EV boom.
Wow, okay. Didn't expect that.
And then there's the national security angle. It's vital for ordnance like military hardware and ammunition primers. So, yeah, definitely critical.
Okay, and the other main product group is zeolite, through their subsidiary, Bear River Zeolite.
That's right. Zeolite is more of an industrial mineral, but it's got a surprising range of uses, too. Think agriculture improving soil. Water filtration is a big one.
Including nuclear waste cleanup. That sounds pretty specialized.
It is. Also, environmental remediation, odor control, even as a supplement in animal feed. It's quite versatile.
And they get gold and silver, too, just as byproducts.
Yeah, valuable little bonuses recovered during the antimony processing. Helps the overall economics.
Now, you mentioned their scale is modest globally, like 4% of the U.S. antimony oxide market, less than 1% internationally. That sounds tiny.
It does sound small on the surface, but here's where context is key. UAMY holds this really unique, really strategic position. It is the nation's only significant producer of antimony products right now.
The only one.
The only significant one, yeah. And crucially, they own and operate the only two permitted antimony smelters in all of North America. And those have been running since the 1970s.
That feels like a massive point. The only smelters.
It's a huge differentiator. And that small market share, if you zoom out, look at the big picture,
Yeah.
it's actually a major opportunity.
How so?
Well, historically, who dominated antimony? China. Over 60% of world demand, easily.
Right.
But now, the U.S. is actively trying to onshore critical supply chains, reduce reliance on China, on Russia. So UAMY's 4% domestic share isn't a ceiling, it's a floor. It's a starting point to capture all that demand that used to be met by imports.
Ah, okay. So that leads directly into their main value proposition then.
Precisely. They offer a secure, reliable domestic supply of antimony. And the U.S. government has officially labeled antimony as critical to both economic and national security.
So for customers worried about supply chains getting disrupted or geopolitical risks?
UAMY becomes the safe bet. It shields them from that volatility, from relying on places like China and Russia. It offers predictability, security. That's the core value.
Looking at the industry itself, are these markets glowing, antimony and zeolite?
They are. Both are riding some strong long-term growth trends. The global antimony market, for instance, is projected to grow around 6.9% CAGR. That's compound annual growth.
That's pretty healthy growth. What's driving it?
Mainly stricter fire safety regulations globally.
Yeah.
And as we touched on, the acceleration of EV adoption, needing those batteries. But here's the kicker. There's a severe supply constraint right now, largely because China's put restrictions on its exports. That's already caused extreme price swings and shortages in the market. Big opportunity for a non-Chinese supplier.
Okay. And zeolite?
Also expanding steadily. Forecasts vary, maybe 3% to over 7% CAGR. That's tied more to global sustainability trends. Think green construction, phosphate-free detergents, agriculture uses, advanced water treatment. Steady demand growth there.
Now, competition. For antimony, you said China and Russia dominate globally. What about here in the U.S.?
This is critical. Within the United States, UAMY currently faces no direct competition from other active producers.
No one else is actually producing antimony domestically right now.
Not on any significant scale, no. That's an enormous advantage for them at this moment.
There's a bit coming, isn't there?
There is. A significant future competitor is definitely on the horizon. Perpetua Resources, ticker PTA.
Ah, the Stibnite Gold Project in Idaho. I've heard of that.
Exactly. They got their final major federal permit back in May 2025. That project holds the largest known antimony reserve in the U.S.
So when they come online?
Which is expected in about, say, 3 years or so. They're projected to supply maybe 35% of U.S. antimony demand. That's significant.
So it really creates this window for UAMY, doesn't it? A few years to lock in customers and solidify their position.
Absolutely. It's a critical window of opportunity for them.
Yeah.
And it's funny, you see some financial data sites listing like steel companies as UAMY's peers. It just shows how misunderstood their specific niche is.
Right. And the zeolite market.
That one's different. More competitive, more fragmented here in North America. You've got players like St. Cloud Mining, KMI Zeolite, Imerys. It's not the same kind of near monopoly situation.
Okay, regulatory environment. You mentioned the critical mineral designation. How big a deal is that?
It's a major tailwind. It elevates domestic production to a national priority. That means potential government support, like Defense Production Act funding to speed things up.
The DPA, wow.
Yeah. And maybe even more powerfully, remember those broad U.S. tariffs imposed in April 2025? Antimony was explicitly exempted. The government carved it out. That basically created a protected space for domestic producers like UAMY, reinforcing their strategic importance. Of course, they still face all the usual stringent, costly environmental and safety regs, EPA, MSHA, all that.
And getting into this business, it sounds tough. High barriers to entry.
Immense. You're talking massive capital needed up front. The permitting process is incredibly long and complex, Faye. Perpetua's federal process took 8 years.
8 years?
Yeah. Plus, you need specialized technical know-how, and you have to actually find viable mineral deposits. All these things create a really substantial protective moat around an established, fully permitted player like UAMY.
So wrapping up this first chapter, their main competitive edge is really this geopolitical moat then.
That's exactly how I'd put it. It stems from being the only operational domestic producer and smelter right now. And with U.S.-China tensions high, that position has transformed them from just a small miner into effectively a strategic national asset. For customers prioritizing secure supply chains, where else are they going to go domestically?
Nowhere, currently.
Okay, that makes sense. Let's shift gears then. Who's steering the ship through all this? Welcome to Chapter 2, Management Evaluation. If we connect this transformation story, what seems really fascinating is the role of the new management team. Installed in 2024, right? Seems like a pivotal moment. Absolutely, a pivotal event. The team's led by Chairman and CEO Gary C. Evans, appointed CEO back in December 2024.
And his background.
Pretty formidable, especially in capital markets. He calls himself a serial entrepreneur. He's taken 3 energy companies public on the NYSE, raised over $7 billion in capital across various deals.
7 billion, okay.
Yeah. Plus, extensive board experience, 24 years on the Novavax board, including time as chairman and CEO there. So deep experience in growth, finance, governance.
Bringing in someone like that, it definitely signals a major strategic shift, doesn't it? Moving beyond just being a small operational miner.
Oh, completely. It screams ambition for significant growth, for scale, for a much bigger presence in the capital markets. They're not thinking small anymore.
And we saw that almost immediately with that Mexico decision.
Exactly. That was their first really big move. Shutting down those cash-draining Mexican operations, it was clear, decisive, stop the losses, and let them plow resources back into the U.S. projects. Bold, necessary. Showed they weren't afraid to make tough calls.
How are they on communication, transparency, ethics?
They seem quite committed, actually. They've got an investor relations portal. They put out regular press releases on financials, operations. They do quarterly conference calls.
Standard stuff, but good.
Right. Plus, they set up an independent third-party anonymous fraud hotline. That's a solid governance signal. And the CEO, Evans, he's been out there on places like Fox Business telling the company's story. Proactive communication.
So looking at how they're allocating capital now, what's the main strategy? Where's the money going?
It's laser-focused on aggressive top-line growth and securing that dominant spot in the domestic antimony market.
What are the key initiatives?
Well, a major expansion of their main antimony smelter in Thompson Falls, Montana. Big facility upgrades at the Bear River zeolite plant in Idaho. They're investing heavily in increasing production capacity.
And acquisitions, too, not just internal growth.
Correct. They're pursuing targeted M&A as well. They got an exclusive option on some antimony mining claims up in Alaska recently. Acquired the Fostung tungsten property in Ontario, Canada, too.
Tungsten. Interesting diversification.
Potentially. But every major capital move really points back to one thing. Ramp up production to meet this surging demand for secure, non-Chinese critical minerals.
Now, it's worth noting, UAMY doesn't pay a dividend. No share buybacks either.
Nope. And frankly, that's completely expected and appropriate for where they are right now.
A high-growth, capital-intensive phase.
Exactly. They need to retain every bit of earnings to pour back into these expansion projects. That's how you capitalize on this kind of market opportunity. Paying dividends now wouldn't make sense.
Okay, what about return on invested capital, ROIC? Historically, it wasn't great, right?
Historically, it was negative, yeah.
Yeah.
A legacy of past struggles. But the critical inflection point seems to have been Q1 2025. That's when they reported positive income from operations for the first time in recent memory.
So the hope is this is sustainable.
That's the entire investment thesis, really. If this marks the start of a sustainable trend, we could see a dramatic positive swing in ROIC going forward. But it hinges on continued execution.
Okay, makes sense. Let's turn to the numbers themselves. Welcome to Chapter 3, Financial Analysis. For all you numbers-oriented listeners, here's where it gets really interesting. Let's unpack the financials and see what they tell us about this turnaround story.
First off, market cap. As of, let's say, August 8th, 2025, we're looking at roughly $405 million to $423 million for UAMY.
And revenue trends. I gather it's been a bit of a roller coaster, but things have changed recently.
A roller coaster is a good word for the past 5 years, yeah.
Right.
But recently, explosive growth. It's a really clear financial inflection point, coinciding almost perfectly with the geopolitical shifts and the new management strategy.
Give us the numbers.
Okay, so 72% revenue growth in fiscal 2024. Then it accelerated in Q1 2025 to 128% year-over-year growth.
128%.
Massive acceleration. That dip back in 2023, that was mostly those Mexico issues, now resolved, and some zeolite production downtime. So the trend is sharply upwards now.
Profit margins historically were not good, often negative, but that's changing too.
Dramatically. Gross margin, for instance, went from deeply negative in 2023 to a pretty healthy 27.8% on a trailing 12-month basis.
That's a huge swing.
It is. Now, the trailing operating margin is still negative, but that's partly a lagging effect because in Q1 2025, the most recent quarter, they actually showed positive operating income, $358,000.
So the profitability turnaround is just starting to hit the trailing number?
Exactly. Suggests the trend is positive.
What about free cash flow? Generating cash?
Historically, consistently negative. They were investing heavily but not generating enough operating cash. But fiscal 2024 was another milestone. Positive free cash flow of $2.7 million. First time in this recent period.
Okay, that's significant. But Q1 2025 was negative again, and addressed $2.59 million.
It was. But you have to look why. It was driven by a big buildup in inventory, presumably anticipating sales and increased capital expenditures.
So investing in growth.
Right. As long as the underlying operating cash flow keeps improving, using cash for inventory and expansion isn't necessarily bad. It's actually what you'd expect in this phase.
Financial stability, then. Earnings consistency. Sounds like it's been patchy.
Very inconsistent, historically, mostly negative earnings. But again, Q1 2025 reporting positive net income of $547,000. That's a stark, really significant break from the past trend.
And the balance sheet, debt levels.
This is a major strength. They are practically debt-free. Debt-to-equity ratio is tiny, like 0.03.
Wow.
Yeah, total debt is only about $1 million against over $32 million in equity. And they have nearly $19 million in cash and short-term investments, so they operate from a net cash position.
Which gives them a lot of flexibility.
Huge flexibility. Management has actively paid down debt over the last 5 years, too. Great sign.
Short-term liquidity looks good, too. Current ratio was high.
Robust, yeah, 5.26. Their current assets, around $24.8 million, easily cover their current liabilities of about $4.7 million. Plenty of cushion there.
And just to reiterate, no dividend. Appropriate, you said, for reinvesting in growth?
Absolutely appropriate policy right now.
Okay, valuation. This gets tricky with negative historical earnings. Trailing PE is meaningless.
Correct. Not useful here. But analysts are forecasting that sharp turn to profitability. The forward PE estimate is around 24.6.
Still not cheap on a forward basis?
No, but maybe more telling right now is the price-to-sales ratio, PS. It's high, around 22.4.
And what does that high PS tell you?
It screams that the market is pricing in substantial future revenue growth and, crucially, significant margin expansion. The market expects this turnaround to continue and accelerate.
Putting it all together, if you try to estimate an intrinsic value using something like a discounted cash flow or DCF model, what kind of range do you get?
Well, a DCF analysis is inherently long-term focused, based on future cash generation potential. Based on our model, assuming continued strong growth initially, tapering down, we estimate UAMY's intrinsic value could be in the range of $4.75 to $5.50 per share.
$4.75 to $5.50, okay.
Now, obviously, that's sensitive to assumptions, especially long-term antimony prices and, critically, management actually executing on these expansion plans successfully. But it suggests significant potential upside from the current price.
Right. So we've looked inside the company, at management, the numbers. How is the wider market actually perceiving UAMY? That DCF value is way above the current price.
That's the million-dollar question, isn't it?
Yeah.
Is the market fully appreciating this story yet?
Welcome to Chapter 4, Market Sentiment. So what's the read? How does the market see UAMY right now?
Well, if you look at the professional analysts covering the stock, the sentiment is overwhelmingly positive.
Really?
Yeah, the consensus rating is a strong buy. Every single analyst covering them, I think it's 4 or 5, recommends buying the stock.
And their price targets?
The average 12-month target is somewhere between $4.42 and $5.04. The highest one out there goes up to $5.51.
So implying potential upside of, what, 30% to 50% from where it is now?
Exactly. That shows pretty strong conviction from the analysts who follow it closely.
What about general media coverage?
Mostly neutral to positive lately. The focus has been on those strong Q1 2025 results, the expansion plans in Montana and Alaska, and some positive updates on their zeolite reserves. Nothing too controversial.
Okay, so analysts are bullish, media is generally positive, but market indicators show something else is going on, right? That short interest.
Ah, yes. This is fascinating. The short interest, as a percentage of the shares available for trading the float, is exceptionally high.
How high?
Reports put it between 13.04% and maybe even up to 15.78%. That's a lot.
What does that actually mean for listeners?
It means a substantial amount of capital, big bets, are being placed against the company's success. People are borrowing shares and selling them, hoping the price goes down so they can buy them back cheaper.
Why would so many people bet against it if the analysts are so bullish?
Good question. Could be several reasons. Maybe some are hedging other positions. Maybe there are deep doubts about UAMY's ability to execute consistently, given their history.
Or maybe betting that the geopolitical situation changes. China opens the taps again.
That too. Speculation that things normalize, antimony prices fall. Whatever the reason, it creates this really tense, volatile environment.
How so?
Well, if UMI delivers more good news, you could see a short squeeze. The short sellers rush to buy back shares to cover their positions, driving the price up rapidly. But if UMA missteps, has an operational problem.
The shorts are proven right, and the price could fall sharply.
Exactly. High stakes. It highlights this real divergence in market views. Analysts see the fundamentals, the shorts see the risks or execution doubts.
Interesting tension. What about technical indicators like moving averages?
Those are firmly bullish, actually. As of early August 2025, the stock price is trading comfortably above both its 50-day moving average, around $2.84, and its 200-day moving average, near $2.05.
So the recent price trend itself is strong upwards momentum.
Correct. Technically, it looks strong, despite that overhang of short interest.
Okay, so a mixed picture from market signals. Let's look deeper into who actually owns the stock. Welcome to Chapter 5, Ownership Structure. This is always insightful, I find. Who is actually buying into this turnaround story? What does the ownership tell us about conviction levels?
Yeah, looking at the ownership breakdown is revealing. Institutional ownership, meaning big funds, investment managers, holds about 23% to 27% of the shares.
Who's in there? Any notable names?
Well, you've got the big passive index players like Vanguard and BlackRock.
Yeah.
Their presence means the stock's getting integrated into the broader market, which is generally positive.
Okay.
But maybe more significantly, you also see sophisticated, active managers and hedge funds building positions. Names like Millennium Management, Marshall Wace.
Millennium took a big stake, didn't they?
They did. Recent filings showed they increased their stake by over 1,000%. That's a massive increase. And the overall trend is clear. Institutional accumulation. 62 firms increased their positions recently, versus only 26 decreasing. The smart money seems to be moving in.
Wow, Millennium. That's a strong vote of confidence. But maybe even more compelling is the insider activity. What are the executives and directors doing with their own money?
This is arguably one of the most bullish signals you can find for UAMY right now. Insider ownership itself is quite high, maybe 12% to 18%.
Okay.
And get this. Over the last 12 months, there have been 9 separate open market buy transactions by insiders and 0 sales.
0 insider sales in a year and 9 buys.
Exactly. Chairman and CEO Gary Evans himself has been a particularly aggressive buyer. He bought 200,000 shares in one go back in December 2024.
So the people who know the company best are putting their own money on the line, betting on success.
It signals a profound level of confidence in the company's future. It's very hard to argue with insiders buying heavily and nobody selling.
That is compelling. But institutions and insiders aren't the whole story, right? Who holds the majority?
The majority, around 68% or so, is still held by the public and retail investors.
And what does that imply?
Well, a more dispersed ownership like that can sometimes contribute to higher volatility in the stock price compared to one dominated by long-term institutions.
Okay, good perspective. Now, no investment is without risk. Let's try to balance the picture. Welcome to Chapter 6, Risk Assessment. Every opportunity, especially one that's potentially transformative, comes with pitfalls. Let's do a quick SWOT analysis. Strengths, weaknesses, opportunities, threats. What are the core strengths?
Okay, quickly. 1, that geopolitical moat, sole domestic producer, critical mineral, huge strength. 2, the strong balance sheet, net cash, minimal debt, lots of flexibility. 3, the new leadership experience, strong track record, seems aligned. 4, those regulatory tailwinds, the critical mineral status, the tariff exemption, government support.
Got it. And the weaknesses they need to overcome.
Number 1 is probably historical performance. That long history of unprofitability and operational challenges hangs over them. The turnaround is still fresh. 2, scale, they're still small globally, which might mean less pricing power. 3, commodity concentration, hugely dependent on that volatile antimony price for revenue.
Makes sense. Opportunities look pretty compelling, though.
Very. 1, market share capture China's export issues, create a vacuum UAY can fill in the U.S. market. 2, demand growth EVs, defense, renewables, all driving antimony demand. 3, government support potential for more funding, like DPA grants. 4, domestic expansion, those Alaska claims, maybe other fines, lots of potential growth levers.
Okay, but then there are the threats. What keeps management up at night?
Biggest one is probably geopolitical reversal.
Yeah.
If U.S.-China relations suddenly thaw, export bans lift, antimony prices could collapse.
Yeah.
That's a major external risk.
Right.
2, new competition perpetual resources coming online in 3 years is a definite threat to their market share dominance long term. 3, price volatility. Just a sharp, sustained drop in antimony prices for any reason could wipe out their newfound profitability. For operational and environmental risks, standard mining risks, accidents, equipment failure, plus antimony is toxic, so environmental liabilities are always a concern.
How do broader macro factors play in? Inflation, interest rates.
Well, they're exposed to rising input costs like anyone, energy, labor, equipment. That's inflation risk. But as a commodity producer, they're also partly hedged, right? High commodity prices often go with inflation, letting them pass costs on.
And interest rates. Does their strong balance sheet help there?
It does, significantly. Higher rates make future borrowing more expensive, but UAMY isn't reliant on near-term financing because they have that net cash position. It insulates them.
And you mentioned the 2025 U.S. tariffs earlier. Just to be clear, that broader tariff regime is actually a positive for UAMY.
Yes, a net positive. Because while many things got hit with tariffs, antimony was explicitly exempted by the government. This gives UAMY a protected operating environment, reinforces that strategic national asset status, and shields them from the negative side of that trade conflict. It's a competitive advantage, courtesy of geopolitics.
Okay, we've covered a lot of ground. The business, the management, the numbers, market view, ownership, risks. Let's try to synthesize it all. Welcome to Chapter 7, Conclusion.
Right, so if we try to connect all these dots, weigh everything up, what's the final verdict on UAMY look like?
Let's start with the bull case. What are the key pillars supporting a positive view?
I'd say there are four main ones. Pillar one, that powerful geopolitical moat. Being the sole domestic supplier of a critical mineral when relying on China is no longer viable for the U.S. Huge strategic advantage.
Okay.
Pillar two, the financial inflection point. Transitioning from chronic losses to actual nascent profitability, driven by high antimony prices and a decisive operational overhaul under credible new management.
Pillar 3.
The fortress balance sheet, net cash, minimal debt, gives them the financial firepower to fund their ambitious growth plans without relying on costly external capital right now.
And Pillar 4.
Aligned and experienced management, a new CEO with serious capital markets chops, and a board demonstrating huge confidence through significant insider buying, with zero selling. Alignment and belief from the top.
Okay, that's a compelling bull case, but we have to balance it. What are the main points for the bear case, the main concerns?
Also about four key concerns, I think. First, execution risk. Despite the recent wins, they have that long history of struggling. Can they sustain this turnaround? It's not proven over the long term yet.
Fair point.
Second, commodity price risk. That geopolitical situation could change. If China floods the market again, antimony prices could crater, taking UAMY's profitability with it. Highly dependent there.
Third,
future competition. Perpetual resources is coming. In 3 to 5 years, they'll bring significant new domestic supply online, potentially capping UAMY's long-term growth or squeezing margins.
and fourth.
That high short interest we talked about, it signifies deep market skepticism about the bull case. It creates volatility and means there's a large pool of informed capital betting against them. Can't ignore that signal.
So summarizing the valuation again, the DCF model suggested
Our analysis estimated an intrinsic value range of $4.75 to 50 cents per share.
And as of today, August 8th, 2025, the stock is trading around $3.40 per share.
Correct. So it's trading at a pretty significant discount to that estimated intrinsic value range.
What does that discount suggest to you?
It suggests that while the market has definitely started to recognize UAMY's unique strategic position and the recent financial turnaround, it might not yet be fully appreciating the long-term cash flow potential. If, and it's a big if, management successfully executes this expansion strategy within this favorable geopolitical window.
So the whole investment thesis really boils down to
Continued operational execution by this management team and a sustained period of supply constraint, particularly from China, in the global antimony market. Those are the key variables going forward.
Okay. Before we wrap up, let's leave our listeners with something to think about.
Yeah, maybe consider the broader implications here. We talked a lot about critical mineral supply chains. What other, maybe seemingly niche companies out there might be undergoing similar transformations into strategic national assets because of these global supply chain shifts?
And how will this ongoing supply chain warfare, as some call it, continue to reshape industries far beyond just mining? Something to ponder.
Definitely.
All right, that wraps up our deep dive into United States Antimony Corporation. If you found this valuable, please do us a favor, like this analysis, and subscribe to Stock Analytics AI.
Remember, our $4.99 a month members get priority access to deep dives on specific tickers, and we're covering the entire S&P 500 over the next few months. Members get exclusive priority access there, too.
Yep, And if you just want this specific deep dive or another one, dropping us a super thanks is always appreciated.
As always, please remember this analysis was generated by an AI system. It's for educational and informational purposes only.
It should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.
Thanks for joining us on the deep dive.
We look forward to exploring more fascinating topics with you very soon.